Now that we've got some history of the Bollinger Bands and we have kind of a framework of their theoretical background and the history of where they came from, let's talk about the key components that make up the Bollinger Bands. There's really three components that are key. Number one, we've got the moving average component. That's where the trend comes from, and that's also really the key that the deviation is built off of as well. Next, we've got the upper and lower bands. These are going to be the extremes of the trade. And then, of course, we've got that standard deviation. That's the component that makes the Bollinger Bands flexible, whereas those percent bands, as you saw, were not quite so flexible. So let's break each of these down. When we talk about the moving average, this is going to be used to define the intermediate trend. If you go back to some of our Foundations of Stocks and Options teachings, for example, you'll discover that we use three short-term, we call them short-term moving averages. We use the 10, the 20, and the 50 period, and we state that those define, they outline the intermediate trend. That's exactly the same theory that John Bollinger is building from. He's using the 20 period, and it outlines the intermediate trend. Now, what does that mean? It means that it's not going to be flowing with the day-to-day minor level moves of the stock, but rather it's smoothing that out, and it's really defining where that intermediate trend is at that given time. So it's going to be used to define the intermediate trend. Bollinger always uses a simple moving average. This is a very important note to make. We're using the simple moving average. I've talked with him about this subject, and he was very emphatic. If you use the exponential average, it does not give you better signals. In fact, it kind of breaks the system down a little bit. So you need to use a simple moving average in this system here. I'll give you the settings here in just a few minutes. It's going to work just like any other moving average setup. If you're above the average, you're bullish. If you're below the average, then you're going to be bearish, just like every other moving average system. So that particular component is something you should be fairly aware of. It's a fairly well-known component, and that's the way that it's going to work. We're only going to use one average here. We're just going to use that one middle line there. That's going to be your basic simple moving average of the Bollinger Bands. Now, let's take a look at that here on this chart. You see how this average is working. When we're below the average, we're bearish. When we're above the average, we're bullish. You do not have moving average crosses here. Again, if the average is going through the price action of the stock right through here, for example, you're obviously in a sideways move. But again, when we're above the averages, we're bullish. When we're below the average, we're bearish, just like what you're used to with most of your moving average trading systems. Now let's look at the extreme highs and lows. We call those the bands. We got the upper band and the lower band. So the bands establish the upper and the lower range of the trade. And the way that we establish or we create where those bands are drawn is based on a standard deviation that's going to calculate and allow for that volatility. It's a formula. It's beyond what anybody needs to mess with in terms of math. Rather, you just need to understand that's what it is. It's taking the standard deviation from that moving average. The moving average in the middle that we just talked about, that is the key component. Everything's built off of that. Then we've taken a standard deviation above and a standard deviation below that average. That's where we get the upper and the lower band here. So the bands establish the upper and the lower range of the trade. That's what you need to understand here. It's the upper and the lower range of the trade. You've got the upper band, you got the lower band, and the way that we establish where those bands are drawn is based on that moving average. The Bollinger Bands take a standard deviation and it allows for that volatility, and it draws the upper and the lower band based on that middle average. If you don't have that moving average in there, the bands can't be drawn. It's got to have the average because that's the first calculation in the formula. And then, of course, we take that standard deviation. That's math that you and I don't need to mess with. The computer does all the work. You just need to know in theory and in principle here, it's a standard deviation off that moving average. And then the result here is we have a situation where the bands expand as the average price movement increases, and the bands contract when the average price movement decreases. And so another way of saying that, if there's a lot of price movement, then the bands are expanding, and if there's not a lot of price movement, the bands are contracting. And of course, you'll see that on the chart here. Take a look. Notice on this Dow chart, there's not a lot of price movement in here, and the bands are contracting. You see, there's not a whole lot of movement there. Then watch what happens. The price starts to move suddenly, and the bands, of course, expand rapidly here. Then, of course, the price is moving right back up, and what happens? The bands are expanding, I should say, to allow for all of that movement. And you can just take a look at that picture here. I don't even have to draw it. Just look at it. The price movement of the stock itself, or in this case of the index, helps to determine how wide those bands are going to be. If you look over here on the far right, you notice there's not hardly any movement in the index here, and the bands, they've contracted really tight to reflect that there's not a whole lot of volatility going on. That's what's really cool about the Bollinger Bands. It does all that work for you. You're not having to sit here and say, okay, how far is it moving? The bands just do the work, built again off that deviation, off that middle moving average. So the cool thing is, with these components, we've got a system that we can use the Bollinger Bands to help define a relative high and low. Remember, we want to understand where the stock's reaching a high point, where it's reaching a low point, and relatively speaking, we can do that here with the Bollinger Bands. We can define the trends, and of course, we can help define a structure for the price analysis of the stock that we're looking at. In other words, it's taking a lot of that hand-drawn work that we typically do as a technical trader, and it's putting it all here inside the bands. Take a look at this chart here of Target. Notice what happens. Every time we get up to this upper band here, we're starting to define where that area is. Now, sometimes we push outside the band. That's giving us signals too, which we will talk about in some upcoming lessons here. Notice that for the most part here, the top of the band seems to be the highs, the bottom of the band seems to be the lows, and if you look over here on the right side, you see this trend that's established. We're kind of stuck right here in the middle. This is a good Bollinger trend trade here. When you've got low volatility and then it expands, it shows you some big moves that are coming in. And so it gives us structure and it gives us components that we can work with in helping to set up this trade and get a really good idea of what's happening with the stock. Now, there's also going to be some confirmation tools that we're going to be talking about throughout the program. We're going to look at the candlesticks. We're also going to look at W and M patterns, and we're going to look at some indicators. We've got a couple indicators we're going to look at that are Bollinger Band specific. That'll be coming up in class number 2, but I just want to let you know that there's a whole system that's coming around here, around these bands and around these components that we've talked about.